All right, good afternoon, everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I realize I haven't done an afternoon meeting in a while, so there is the extent of the position disclosure update. There are quite a few changes on there, but also a bunch of things that are the same. Okay. So including the market trading down after hours since Amazon came out, SPYs are up 0.14%, the Qs are up 0.3%, the IWM is down 0.5%, but all these indexes are trading lower from where we actually closed. We closed extremely strong today on a $3 billion buy imbalance, which is very sizable. So huge move into the close, but then we sold back down a little bit because of Amazon. Let's take a look at those Amazon numbers. Where is Amazon currently trading? Yeah, Amazon is trading very poorly. It's the guidance is the problem. So initial numbers here look good. Fourth quarter adjusted EBITDA beats, monthly active users beats, fourth quarter adjusted EPS misses. I'm looking at Pinterest. Hold on. Clicked on the wrong thing here. Amazon. Let me look at this again. Operating income beats. Net sales kind of in line, small beat. EPS solid beat. Operating margin solid beat. AWS is a miss, which I don't think is surprising because I think Google missed on cloud, Microsoft missed on cloud, Amazon missed on cloud. They're all missing on cloud. The guidance comes in as a problem. Amazon sees first quarter net sales 151 to 155.5 billion versus estimates of 158.64 billion. It's very light. Amazon sees first quarter operating income 14 to 18 billion versus estimates of 18.24 billion. So their range there doesn't even fall into the estimate. So Amazon is getting hit real nicely here after hours. It's incredible to me, and I said this a little bit in the morning meeting, but now Amazon adds on to it. The biggest market cap companies in the world that seem to be all that matters have been really, really bad, I think, overall this earnings season. I mean, not like disasters. They're not going out of business, but the numbers have been lacking on pretty much every report except for Meta on the Mag 7 names that have reported. And now they've all reported except for NVIDIA. They've all been bad. But there is just this never-ending underlying bid to this market that continues to hold us up. I mean, the technicals here continue to look great. We gap down on scary news for 2 Mondays in a row and then spend the entire rest of the week with this underlying bid that just continues to drive the market higher. But that's with Tesla. I guess Tesla was technically up on its earnings day, but this has been like the worst one since then. It's been trading really poorly. Apple. They gapped it up because of the cash that they're returning to shareholders just to sell it back down. The Google report, no good, sold it off. Microsoft report, no good, they sold it off. Meta was pretty good. And I would argue that the continuation on Meta isn't even that great, all things considered. But Meta being the best one, and Netflix, which we don't really count, actually was probably the best one, but we kind of took that out of the Mag 7 at this point. AMD also down on the earnings report, but the market just has this really strong underlying bid, and systematic buying doesn't care. It just comes in and buys, and when it does it at the S&P level and realized vol gets squashed like it started to again recently, it just creates this dispersion effect where you can even have all these Mag 7 stocks not trading well on their earnings report, but then if the SPYs and Qs need to hold in because of the forced buying that's coming in and the positive gamma and everything else, then it just means that actually everything else has to trade a little bit better, and that seems to be what it is. I almost wonder I mean, I do wonder, like when I'm trading Palantir to the short side and getting my face absolutely ripped off, um, I wonder sometimes what I even want to help this Palantir go down when I'm looking at the market. You know, I'm so used to an entire career's worth of trading where I take my cues off the indexes before I go down to individual stocks. And I'm like, all right, let me see if I can get a pullback in the cues that might help my Palantir short position. And then I'm like, but I don't even know if that helps anymore. You know, it might mean that what I actually need for Palantir to go down is actually like Mag 7 to go up. For some money to come back into the things that have been selling down. And I didn't mention Nvidia. Nvidia hasn't reported yet, but Nvidia overall is still kind of a broken chart here as well. So all of the most major companies have not been trading well, yet the SPYs and the Qs absolutely hold in as there has been some rotation, though the IWM failed on that 230 breakout today. And yeah, I mean, that's kind of where we're at the index level. And that forced buying is starting to get a little bit long in the tooth, but I don't think it's done yet. We were looking at a few research notes. One was in Pat's note this morning that talked about retail doing more buying now than they were doing at COVID, and according to J.P. Morgan, however they measure their sentiment levels, having a higher sentiment level than at the highest portion of the meme bubble, which is crazy. So retail seems like they're getting a little extended. The CTAs are starting to extend a little bit as well, but vol control still has a lot to potentially buy, and the buybacks in this market are going to be turning back on soon at some point as well. So this market just continues to it seems like it just has this never-ending underlying bid to it. I kind of postulated in the morning meeting today that we could see that start to run dry in the second half of February, particularly as we go into and then shortly after the OPEX week on February. That's when you also start to get some seasonal weakness and some flows that tend to come out of the market. But until then, especially if the realized vol numbers stay low, we can just continue to have this underlying bid to the market. And there's still, I feel like, some room for the VIX to continue to drop as well before we start seeing some of that opportunistic hedging call buying that we've seen in the past when the VIX gets really low. That kind of sets up some of the vol shocks and the market shocks that have been able to bring this market down at certain points in the past. But yeah, I mean, it's just an incredibly resilient market with just a lot of rotation that continuously happens under the hood within the confines of seemingly a lot of bad stuff. Poor earnings from Mag 7, which, if you guys remember, in I don't remember, early to mid-January, I was highlighting poor earnings from the Mag 7 names as what I felt was one of the biggest potential catalysts for a broader sell-off in the market. It kind of seemed like I got a little bit of what I wanted. I know that the reports weren't disastrous, yet the market has continued to hold in, and now it has also started to get helped a little bit by this move lower in interest rates, as represented by this move in TLT here as well. The Qs still are below 530, so they're still in that broadly neutral zone between 510 and 530, but they are knocking on that 430 door. They easily could get through it tomorrow. Maybe them selling Amazon just means that they got to buy more Palantir tomorrow to help the Qs continue to hold up. But bottom line, I guess, is just an incredibly resilient market. But I feel like there's some canaries in the coal mines right now where if we can get to a point where this market is dynamically allowed to sell, then it may. And obviously we'll see if that happens or not, but I don't think that would happen. I mean, this week's almost over, but even next week, I feel like we got to get to at least the week of the 17th to start thinking about, outside of some sort of insane headline that hits, just from a market dynamic perspective, us to potentially pull back. But I also feel like if that pullback really does happen, if we actually can get a deep pullback at some point, it would become a pullback that would actually feed on itself, I think, in a bigger way than we've seen on some of these very short-term dip buy opportunities where these shallow dip buyers are just coming in and buying these 2 to 3% pullbacks like it's going out of style. At a certain point, I'd be curious to see if we get a 2 to 3% pullback that becomes a 5 to 7% pullback, and then that changes the dynamic that actually creates a market correction. I do think that we would see a market. I'm expecting that we're going to see some sort of market correction in 2025, probably sooner rather than later. It doesn't. You don't have to be a genius to make that call. I think historically you see a 10% pullback in the market, like every 9 months or something like that. So to say that we're going to see one this year is not a huge call, especially coming off of 20% plus positive years in a row, which tends to lead to a, historically anyway, a flatter, more volatile year marked by deeper pullbacks. Obviously, every single situation and scenario with the indexes is a new scenario, and it's a new year, and it wouldn't be impossible to get, even if it's never happened before in history. There always has to be a first time, right? Where maybe you could get 3 back-to-back 20+% years in a row. I'm not sure if that's ever happened in the past. It may have in the 90s, but I'm not 100% sure. If it has, it's an extremely, extremely rare event. But I just feel like some of this stuff under the hood here is getting concerning, yet you have to take your cues from the technicals of this market first and foremost. I'm describing theory. The technicals tell us how that theory is more practical, and if it's correct, honestly, and how to manage risk reward. And right now, these SPYs are neutral bullish. I would say they're full-on bullish above the 607 to 610 resistance. The Qs are neutral. They become bullish above 530, which we're very close to. The IWM is neutral to bullish as well, and would be much more bullish with a close above 230. The IWM actually give like a breakout failure today above 230, which is interesting considering where the TLT's at. It felt like a day that only 2 stocks, like Brant was saying, only like 2 stocks in the entire market were moving higher, and it's all you needed though in order for the Nasdaq to really be able to hold in and continue. Yeah, that's pretty much all I got. Might be my worst day ever today. I got absolutely run over in Palantir. Just is what it is. It's great to have one day that you're working in the confines of a vacation week and have it be the worst day that you've ever had in your career. But it is what it is. I just got absolutely run over in this thing. I started shorting what I thought was extension at like on size at like 104-ish, I think. Planning on sizing out of that on a touch of the 80 MA on the daily, and I didn't. I mean, on the 5 minute, and I didn't actually get that till 11 o'clock at 107.50, and I kept barely missing some really, really important bids by small amounts. I remember at this low here, I had a nice bid at 107.01 to take off stock for a loss. Low was 107.02, so I ended up taking that off 50 cents higher, so it cost me even more money. And then on a deeper pullback here on like a 15-minute time frame correction, this low was 106.67. I had a really big bid at 106.61, so barely couldn't get filled on a couple of those, and then they just kind of ran me over when this thing would just continue higher, and that's on top of getting smoked in this thing by holding some stock short into the earnings report, where I knew that I had a decent amount of risk on my Palantir short still, but I had actually sized down on that short over the course of time going into this earnings report. I had talked about that a bunch, actually. I sized down here. I called for a size down opportunity for anybody that was short on the pullback to 78.50 the day of the earnings report. It reported that afternoon. I sold puts into the report as well. I sold 78 puts into the report to get myself some additional cash flow on that, just in case the thing moved higher. So I thought I was actually decently covered between reducing some size, selling some puts, having booked some profit into that earnings report. And the move just was so big, vastly exceeding the expected move on options, that I got totally smoked on Monday, and then I lost actually a good bit more than that today than I did on Monday. So today may be my worst day ever. We're working towards my worst week of my career. Fantastic considering that I'm not even actually here in trading and not managing my positions for the week. So that's a special talent to be able to pull that one off. But yeah, I mean, it just is what it is. I will continue to manage the position. The scary thing about this is with the way that it's beginning to move now and some of that option flow that was hitting today, like those 117 calls that were coming in. And today technically only is a day one. I know there's a huge amount of extension down to the daily ADMA, which is at $94. But I mean, look, we saw it with like what MSTR did when it did this move. We've seen it with Tesla in the past. When these gamma squeezes come in and it's a day one, it wouldn't be impossible for this thing to see 125, 130 by early next week before it actually is a full parabolic upside top in this thing that would then become a huge shorting opportunity. So just keep that in mind if you are trying to be short this, that it's not impossible for this thing to, even though we kind of think it seems ridiculous and it's so extended and you got the technical extension and the fundamentals don't make any sense up here, in my opinion. These things can just absolutely continue to rip. So it wouldn't be impossible to see this get to $130, $135 before it actually tops out. Again, somewhat similar to this MSTR trade. The difference on the MSTR trade was I was flat this thing on the up move, and then we recognized that massive extension parabolic top to be able to short it, and we absolutely crushed it. The difference here is that this has just been a position that I've already been in, so that management of that position would mean that I'll be in a really tough spot if this thing actually gets up to 125 to 135. But at the same time, I'm a real stickler for game plans, and I follow through on game plans even when they're painful, and it's happened to me once or twice in the past. The Palantir earnings report was phenomenal. It was phenomenal. The stock deserves to move higher on that report. I had thought, based on the fundamentals of this stock going into the report, that the stock should trade somewhere between like $40 to $60. That report was so good that I now actually think that the stock probably belongs trading somewhere $75 to $85 is where I think it belongs, and that's an big air quote around that, right? Because stocks can remain irrational for longer than you can remain solvent and all that good stuff. But and what probably is helping this even more, honestly, and this is what I was talking about a little bit before, is that the rest of these earnings reports have been crap. There's nowhere else for these retail psychos to pump their money into right now because the earnings reports have been crap. There's been no momentum on the upside in Tesla or even quantum stocks or like anything. Like this is the one. This is the one. It's the only one. And again, giving credit where credit's due, that Palantir earnings report was a stellar beat. Now, does it belong to be trading at? I don't know what the number is here at $112. 200 a 200 forward earnings multiple? I'm going to argue no, but they're certainly doing a fantastic job from the fundamental side on continuing to crush earnings reports and drive this thing higher. And I wasn't really that surprised to see that they beat on earnings as much as they did, but the degree of the reaction here is just pretty wild. So that is, I guess, all that I've got. I'm happy to answer any questions anybody has. A buyback call? I don't know what that means. Sorry, just pulling up the YouTube here. A stock buyback in Palantir? It's the last thing I need. I'm short. If they announce a stock buyback tomorrow, I think it would go to $50 like instantly. Will Amazon impact Alibaba? I don't know. Is it? Not at all. At least not yet. I don't know why it would. I mean, they're so different. Not that I'm aware of. A secondary offering. They don't need. Palantir doesn't need to do a secondary offering. They make money now. They have positive free cash flow. They don't need to do. They don't need to do an offering. What is happening and what will continue to happen is insider selling. That I'm very confident of. I think that the insiders are going to continue to. They already were. I think they're going to continue to dump into this move, but they're probably still in a little bit of a blackout window post the earnings report. But that should be ending soon. That might only actually last for like a couple days after they report. So we'll see if some insider selling starts to come in on these things. I would expect that it would. What else? What other questions? From Scott on YouTube, possible head and shoulders starting to form on Palantir. I'm looking at a 2-hour and a 4-hour time frame on head and shoulders. I think that's a very hard call when it closed on highs. I don't have a 2-hour or a 4-hour. I have a 1 hour. I don't know. It seems like a very hard initial call here. You would need a whole head to form. Then you would need a retest of 100. Then you would need a bounce back to 106. Then you would need a third retest of 100. Then it would need to break 100. And then if that were to happen, you would get follow through from the top of the head from $100. That's the measured move down to the downside. So at this point, if 112 is the absolute top of the head, let's just say, which it probably won't be, then you could get a move back down to $88 off of that. But I think it's so early to call a head and shoulders pattern when you don't even have a formed head yet. If it can form a head up here and retest $100, then we could maybe look at the build out of that on an hourly chart. But it seems very early right now. Yeah, I still really like Alibaba. I mentioned it in the morning meeting, and I know Pat said it at some point today. No, it's all good, man. It's building out a bull wedge here and a bull flag, but it's particularly impressive that it's building out this bull wedge and bull flag given the tariff announcement that happened this week and everything else. So just really impressive that this is holding in. I think Alibaba looks fantastic for continuation. I'm still long. I'm also long yin. Looking for continuation on that above 34. I am out of JD for now. Being patient on a re-entry on it. I like it though. I got into Tiger today, so I did increase some China exposure. Didn't close as well as I wanted to, but I'm gonna give it a little bit of space. Need this thing to really break through 750 with these other Chinese names to make a leg up. I like it. Hims is a possible short, but you needed to short it today. You needed to short it today versus yesterday's high. Now it's already fulfilled part of the, the target on that short would really only be like $38. Maybe a secondary target at the midpoint between the 8 and 21 EMA, like 35.50 or so. So you wanna have that on already. AMD from Robert. Yeah, so AMD, just another important company that couldn't hold up on its earnings report. It was so beaten up into that report that even though the report wasn't great, I thought that they might buy it back. They did. But this little buyback that it did yesterday, it needs to do a lot more work. It really needs to get above 120, I think, to start looking good. So if you're buying it here, you're more taking a stab that after a 50% pullback now from highs in AMD, that there's enough value here where this thing can base out and round up. Their computer business seemed like it was still pretty strong, but they're just not competing on the AI front. And the market didn't like to hear that because all the market cares about right now is AI. So as I remember the report in my brain now, I didn't think it was terrible, but I didn't think it was good. It probably deserved to trade down on it. The question is, it's down so much into that report, can it actually begin to break up on it? I don't hate the idea of taking a shot being long versus that earnings day low, but you really, it's got to get above 113, which is previous support, and really it's got to get above 120 to begin to break this downtrend. It's got a lot of work to do, but I have a small position long in it. Yeah, left side's forming, Scott. And I don't disagree with you, Scott, in the YouTube. I just think it's very hard to call that type of pattern so early in the potential forming of it. You may prove to be right, but even if you are right, it could be, you know, another week before the pattern is even fully built out before it even actually triggers. So let's just continue to watch it. I do think that there's a short in Palantir that will pay at some point, but you got to be very, very careful on jumping in front of this gamma squeeze momentum that's coming into this thing. Like I said before, it's not impossible for this to do an MSTR type move, which would probably be the equivalent of this thing getting up to $125, $235 before that short comes in. So just make sure that you're, not shorting the upside momentum like I did today, and you're shorting off of a signal, and you're stopping yourself out if that signal is wrong, or you're waiting until you get like into that day 2, day 3 to really be able to build in onto the extension on the short side there. All right, good stuff, Jake. Jake in the YouTube giving a shout out to Pat for making him some money on HIMS on the short side. Good stuff. Yeah, AMD had no forecast for AI. That's what hit it down for sure. That's all the market cares about now. Apex Joy wants to know if I think ASTS is a good short. It's getting there also, really extending up. Tomorrow you might be able to look for like an RDR or maybe on Monday. Varun wants to know why I got out of JD. Simply because I got to my target. My target was 42.50. I got out of my target, and I didn't rush back in on the pullback because I have exposure to Alibaba and Yin. And that's pretty much the extent of it. But I like JD. Don't get me wrong. I like them all. JD had been like the best performer there. Now Alibaba has picked up as the best performer just because of its exposure to AI. Thoughts on Google? I don't know. I like Google as a company. I don't like that their cloud numbers weren't good. 187.50 some support. I think I mentioned in the morning meeting today that you could try to be long versus 187.50. If you lose that level, get out of the way. So I like the company. I don't know. I don't love the market either, though. So just watch that 187.50. The more time it spends down here, the worse it is. So I don't love it. I don't love it, but it's been one of my favorite in the Mag 7 space. And it's not broken because it's still above the support level. All right, looks like I got through the questions, so I'm going to end the meeting there. I'm going to go lick my wounds, and I'm out tomorrow, so I'll see everybody on Monday. Have a great long week. I'll have a great long weekend. You all just have a great Friday of trading and a great weekend.